Hello, my name is Shauza. I provide Forex guidance and insights regarding fundamentals, technicals, and not psychology but philosophy. Philosophy is the root of all behavior and renders psychology meaningless. My trading strategy revolves around analyzing the currency indexes: the dollar, the euro, the yen, the CAD, the pound, the Aussie, the Kiwi, the franc. And upon my charts, you'll see the LBD, also known as the layered belief drift indicator. It indicates belief through time as bullish or bearish, and it works by first plotting a series of lines. These lines are EMA percentage differences. The percentage difference between the 2-day EMA and the 1-week EMA, and so forth. It then plots the mean of these percentage differences. Plotting against the zero line allows for the measure of directional volatility. Positive percent is bullish volatility, negative percent for bearish volatility. This is then transposed to the price charts and indexes. The zero line is plotted alongside the mean percentage diff line. The area between is hatched bullish or bearish, and any crossovers indicate a new phase in the market. In my opinion, belief is king. It comes before macros. Macros are powerless without the crowd's belief. And belief is also the essence of reflexivity. It is panic, fear, and greed. And as said before, I will focus on the currency indexes. The reason being is because they filter noise. Currency pairs are to be thought as the superposition of index waves. This transposition creates meaningless rogue waves. At sea, rogue waves break ships, and here they will destroy your stop loss. Indexes are representations of true basket strength. They are the result of an almost zero-sum formula. Understanding the strength differentials provides arbitrage and presently active opportunities. Okay, it's the 26th of April, Saturday. We'll go through the indexes. Layered belief drift is on. So we see here on the 4-hour we're still bearish, but it's starting to end. It's undecided how this is going to turn out. And on the 1-hour, that bullishness is continuing. We might see a reversal here. Maybe even so, if we see here, if we break this line, it's very likely that we'll go bullish on the US dollar. And if that's the case, that might signal the end of this massive bearishness. This bearishness here caused by Trump. But this bearishness has been persistent for some time now. Okay, yeah, not much to say, but then just watch out. Don't trade bear on the dollar anymore. You know, it's uncertain. It might be ranging. There's better opportunities. EXY, 4-hour bullish, 1 hour. Could be breaking, could be ranging. It's worth waiting. I'm gonna wait. Well, or you can be aggressive and just lower your risk. As you can see, I've got a live trade on euro along. So yeah, you just lower your risk on euro. What comes after that? Yen. So yeah, this is interesting. We're seeing an actual. We're still bullish, but look at this 1 hour. We're beginning to reverse. We had a gap down, and it's continued to gap down. Are we trending down? Is this a significant trend? You know, we'll have to see. We'll have to see. Any breakup of this level, I consider it bullish. And the reason I've drawn this level on is you see this resistance here. If the index finds resistance, it will be around here and follow this trend line that's been persistent since the start of 2025. And will we see a symmetrical move here? This is here. If we come down, we may see a line to symmetry, but in the meantime, when that 4-hour goes bearish, I'm going bearish. So that's what we're watching out for. Where I'm going to see the 1-hour flip or the 4-hour flip. So watch out for that. The yen, and now we're doing the CXY. So yeah, this is actually doing all right. We're ranging on the 1 hour, 4 hour, we're pretty bullish. I like this. Calling bullish on CAD. Pound. Same as CAD, but actually that range is much bigger here. So a little bit more bullish on the pound, a little bit more strength relative to the CAD. That's the benefit of indexes. You can see the relative strength pretty, and you can see it with other ways, but it's pretty easy to see there. What else? So yeah, I'd like to go bullish on this, but they've got such a long persistent range here that I'm kind of scared to, this is a very notable point of resistance. Very suddenly on any position I take, say if we get a retest on one of these pairs, a pullback on the Australian dollar, that would mean a pullback on one of the other pairs means a pullback on the index. And then, if we break this line, would we just continue going? And that would be the trade that you would be in. I'd rather wait. If we break here and here, well, probably here, I'm going to call bearish and I'm going to call bullish. I'm going to call very bearish if we break here. So not much has changed since a few days ago. JXY. Yeah, we were really strong, but we kind of got down once. Here. Oh, sorry, no. We came down, we gapped up, then we gapped down, but there's no return there. Are we in a range? Don't know. It's pretty scary if it falls down here and here. That bullishness kind of deteriorates. SXY, 4 hour we're bullish, but on the 1 hour we've gone bearish. Seems that there's almost a trend line. Are we going to have a wedge here, like what we had here? And this little shoot up here was caused by Trump. If there's no Trump there, look at these lower lows. Really, you would have expected that to drop as the buyers deteriorate. So we're seeing more and more buyers deteriorate on the short term here after a period of, uptrending, I'd guess. We'll see what happens with that. But because of this weakening CAD, I've actually gone bear. You see, I've got a few positions here. So I actually lost a CHF JPY trade because of the reversal of the yen. It just wasn't a big deal because it was a low risk trade. So look at this. We've got a CAD trade here going for that range that's actually already hit. In the future, I'll probably post more videos. If you're just seeing this now, if you want to take the same trades, I mean, let me just say this is the demo account. I'm trying to build this demo up for at least 4 months of probably have around about 300, maybe 400 trades on the account. It depends how many multi-position trades I take, but yeah. I'm up on this trade though. Spread's massive because the market's closed right now. So this was like the end of our spread. And yeah, we kind of bounced off a 0.618 level here on that trough to peak, and it's kind of held. Also, this is just a technical level, regardless of Fibonacci's. But what's interesting is if you look at how price pulled back here, take note of this peak and this peak. So this is the CAD. Look at those two peaks. 1, 2. Price is in between the two. If we go to the pound, those peaks are actually here. And instead of price being down here, price is up here. It hasn't even broken the first peak. The pound is much stronger than the CAD right now. You can see that here. You can see that. We're still near those peaks. In fact, you could say that peak is not even changed much, but we've actually already dropped down from that. So yeah, CAD and the pound. And you think about these two peaks again. 1, 2. We go to the euro. I'd say the peak is there and there. So the mid-range is here, a little bit weaker than the pound. We had a surge up, but we've had a surge down. So the euro and the CHF are normally opposing trades. It's a safe haven. The Swiss franc is quite relative to those in the European Union. Quite close by, and a lot of people can easily access the Swiss franc when they move it between. So it normally is quite a polarizing pair. You mean you're going up, down, up, down. You just see it all along. It's just up, down. You might have these sudden changes, big corrections, but those corrections are incredibly violent and quick. Sometimes they're a single wick. Look at this. So right now we're having a period of nothingness. People slowly exiting the Swiss franc trade. So this is fear being priced in quickly, and then this is the fear being slowly priced out and people getting more and more comfortable. I guess you could say this is greed being priced in quickly. So yeah, you have these moments, and I assume these moments mostly likely align with a little bit of reduced tensions globally, and especially on the European Union. Oh yeah, and I also have a gold trade. Interesting, but I need to watch this carefully, and the CAD trade, because on Monday the Prime Minister, or not Prime Minister, whatever he is in Canada, he's going to get elected. So be aware of that. That's a thing you should watch out for. COD data came out yesterday. Actually, I wonder what that was like. And what I'm interested in here is actually to see the Swiss franc. 14%. We've seen an increase of 1%. Big winner last time was actually the CAD. I think the CAD went up 3% last time. We're now at 17.67. 17.67. 2%, so 3%, 2%. Yeah, it's significant. This has been at 10% for a long time. 10% longs, and now it's starting to go up. Yeah. So going into next week, what would I be looking for on Monday? Managing trades, seeing if this pound and euro strength persists, since the CAD's going to get a bit risky. Swiss franc. I need to have a look at what happened with gold and the Canadian dollar last time Trudeau got elected. We might see a mirror, but you might not. It depends completely on the environment at the time. So yeah, I need to compare the two. But yeah, a 1 hour time frame. Bullish euro, bullish pounds, bearish franc. Some good opportunities there. And like I said in the intro, the LBD provides presently active opportunities. These opportunities can fizzle away quickly. So we just got to keep managing and watching those indexes. I mean, yeah, and avoiding any of the rogue waves like this from just, information derived off macros and news, it gets priced in quick right now. Or fear gets priced in quick headlines. I just want to trade with the flow, and that's the benefit of the indexes and LBD, which I will likely be putting onto the TradingView indicators. Yes, we shall see. We shall see. Right, thanks for watching. Short one this time. See ya.